I want to bring in Bell Point Chief Strategist David Nelson. So, David, a couple things that happened today. Of course, what's happening in the Middle East, getting more intense. That doesn't help. Earnings, United Airlines down, JP Hunt down, Morgan Stanley down. And just minutes ago, we got the Beige Book out, which doesn't necessarily move markets, but this one may have, because they're saying declining consumer travel and leisure. They make big note of that. Bookings.com down $100 a share. So that's on top of UAL, United missing or giving poor guidance. We keep hearing the financial media say one thing, and then I keep hearing corporations say a different thing.
Look, the market's doing the math. And to your point, the cyclical trade is struggling today. But I think the market looks at the events in the Middle East. It sees that we're expanding into a new conflict. That's on the heels of Ukraine, eventually in the Indo-Pacific. Eventually, that means more bonds coming to market. That means higher rates. Higher rates generally mean lower multiples, and also it's a selling signal for stocks. But even with all that, Charles, I get it. There's a lot of elephants in the room, and they're all getting bigger. There are things you can do in this market. We have some weapons at our disposal.
All right, I want to ask you about that. But first, you just mentioned these bond yields. We had a 20-year auction. They raised $13 billion, but they had to do it at the highest yield ever for the 20-year.
It's almost as bad as last week. I was here a week ago, and that happened.
Thursday and Friday, right?
Yeah.
The Thursday was the 10-year. Last Friday was the 30-year. Unmitigated disasters. Again, this market, every time it felt like it was coming back, that same scenario plays out. I mean, is there any chance that the government's curb spending, or we just keep going full steam ahead? Because that keeps the Fed in play too, right?
It keeps the Fed in play, and the Fed is trying to solve a problem they can't solve. A lot of this is on the fiscal side. And we're running debts and deficits so large. We were running, $1 trillion annually. Now we're $1 trillion every 6 months and higher. So obviously something's going to have to change, and it's going to take an election to do that. But we have opportunities here. So
talk about those.
We have a defensive weapon right now that we haven't had for 15 years. You park half your money in a T-bill at better than 5%. I don't care what you do with the other half. You can take as much risk as you want. Buy Bitcoin, buy tech stocks. Because at worst, if I'm wrong, and that side of the portfolio is down 20%, you're down single digits to the downside. That's livable. Mm-hmm. That's recoverable. And that's a risk-reward matrix I'll buy into. And
there is the one stock. You did add one stock to your portfolio.
I did. I should have waited a day because it's down pretty hard today. Parker Hannifin. It's now called Parker. Look, I get it's boring. It's filters, things like that. It's an industrial company, but these are mission critical items. And even here, there's an AI story. They're actually rolling out the ability to identify things that are going to fall in advance. That cuts right to the bottom line. Right. A lot of companies will buy into that.
I love Parker Hannifin. I've loved it for years, on and off. I mean, for at least 20 years. It's an amazingly run company. So I'm with you. We talked about industrials in the beginning of the show. So a day early may not be the worst thing in the world.
Not too bad.
All right, David, thanks a lot.
Thanks for having me.